right? So I'm not really, going into very technical aspect of valuation, but try to kind of explain the perspective of startup and investor in terms of getting a valuation and doing a deal ultimately on that particular valuation, right? So I will just, take a step back and understand what is the initial perception that goes behind these valuation workings and discussion and ultimately deals, right? So as we go on the first slide, yeah. So, whenever a startup is looking to do a valuation, right? Startup itself is a very, not very, technically backed up term, right? So anybody who is starting a new business can be called startup, right? Definitely there is some definition or certain, kind of parameters has been defined by Government of India to recognize some company as a startup, right? But that doesn't really directly link to any investment in the company, right? So those terms are purely from a point of view that, okay, there is a new company that has been registered. He's trying to do something on the ground and there will be certain impact on the ground from a social, point of view, right? People will have a better life, certain livelihood and there will be improvement in the overall living standard of the people, right? Now from a, investment point of view, if we talk about valuation, particularly for any founder or startup as a whole, valuation becomes a buzzword from the day one only, right? Not even at the day one, even before that. So if I am as an entrepreneur thinking of starting a business or becoming entrepreneur, the first thing that comes to mind is what should be the valuation of my, startup or the organization I'm trying to build, right? So there is a lot of PR coverage, startup company valuation with millions of fundraise, right? So whenever you think of a startup, you think that, okay, a lot of startup has raised a lot of money and they are raising, millions of dollars and they can become millionaires in, like short span of time, right? So a lot of people are excited, curious, amazed, surprised, however, carry no or limited insight to it, right? So it's better to kind of, think through it, understand certain technical aspect and then only, comment on the valuation or even expect something out of it. So every founder wants to know the valuation even before any idea of venture. So I have sometimes, got a call where, the founder is looking to start a business and he tells me certain parameters that, okay, I want to start business in healthcare sector. This is the particular reason I want to focus on certain, kind of assumption on the product development or the solution development. And the next question that comes in okay, what would be the valuation of my venture, right? Now, as an analyst or somebody who comes from the ecosystem, I try to explain certain parameters, but ultimately that works ultimately as a, kind of a discouraging factor to them. Because they feel that, okay, there's a lot of technicalities involved and, whatever I've been thinking is not really matching with that. And ultimately, idea of that, starting a venture is kind of postponed and sometimes people, kind of drop that as well. And that's particularly happening because you're coming with understanding from a lot of PR and what's happened, has been written in the newspapers. A lot of, things come on the television, a lot of people are talking about it. But yes, if we are starting a, startup is actually a business ultimately, right? So you have to think from a, very financial point of view. You must have a, proper structured plan for next at least 3 to 5 years and kind of have a tools to kind of showcase that in a very structured manner, right? So again, people with, no or limited knowledge, significance or, they don't have any significance or technical aspect. Only motivation for valuation is assignment of large fundraise, somebody is becoming millionaire in a short span of time. Like Mr. Rajiv also mentioned, there are unicorns, another buzzword which people are having a higher and higher valuation never ends, right? So every fundraise the company is having, they have a higher valuation, right? And they are also, this valuation is increasing very frequently and increasing significantly. So one round you raise for, let's say, 3 to 5 million of kind of valuation, and 6 months down the line you raise another round and your valuation, easily cross $100 million, right? So that really kind of amazes the people and they think that, okay, if I think of something and we have spent, let's say 10 years in industry, and they think of starting a, venture and they straight away think of valuation and they think that, okay, if you think, put up a little infrastructure or can convince a investor, ultimately they can achieve those numbers. But in ground reality, it is, it takes a step-by-step approach, right? So another buzzword in the ecosystem is minicon, decacon, hectacons, unicons, indicons. And, young people are also encouraged to kind of start up and they kind of like 30 under 30, 40 under 40, and the list goes on, right? So this is the kind of, overall perspective I want to kind of, showcase when anybody or as a layman thinking about a valuation, or somebody who is just kind of looking to step into a, shoes of a founder. And this is the kind of perception they carry. Hard to manage, I believe. Yeah. So, taking a step forward, what is the perspective of a valuation, right? You all are, financial expert, and you understand, if we are doing a company valuation that particularly targeted towards equity investment in the company, or anything that's, happening around a share, transaction within the company, right? So, equity fundraise, merger and acquisition, joint venture, ESOP, FDI, revaluation, etc., right? Now, from a particularly startup point of view, the valuation, can have a different meaning or different effect as per the perspective of the founders and certain key people and investor on the other side, right? So one thing we have to kind of agree here is when we are talking about startup, you are agreeing to a factor that there is no historical information available, right? Or there is hardly any. And even if it's there, that is not really enough to do a logical valuation, right? Now the other aspect is that you have to depend on the future projections, right? And if the startup or company is saying that their product, solution, or service that they're looking to offer would be unique in the market, right? So there is no benchmark or there is no existing similar business, right? So what is the tool that you have to benchmark those projections and ultimately support a valuation which the startup is expecting, or maybe, that will, kind of contributes towards ultimate any, successful transaction, right? So, different perspective do influence the process of building consensus on the ultimate valuation. The valuation do have specific approaches and methodologies. However, for startup, it's mix of art and science, right? So you have to have certain financial parameters depending on which you will give a valuation to the startup or a company. But as a financial expert, what are the other aspects beside financial aspect that you can capture, which are more logical, which kind of ultimately builds the confidence, your confidence as an analyst, and you can also kind of convince the founders, and ultimately the founders will be able to convince the investors to do a deal, right? So financial aspect, definitely you have to agree that there is a scarcity of certain, factors which are in general you use for established organization or who has been in operation for like 5-10 years already. So you, like as a valuers or as a financial analyst, some parameters are already there in the ecosystem, and some through your own experience and your interaction with the key people involved. Then you have to drive as per the industry, as per the stage of the startup, as per the perspective of the deal. Then you can kind of build a story which is ultimately be kind of, become a basis for any valuation process. Yeah. So coming back to basics, right? When you do valuation for any company, you ask for certain historical financial data, certain, operating metrics, and then, what will be the growth that the company can achieve in next 3 to 5 years, and depending on that, what will be the revenue and the cost, and ultimately when the company will be able to generate any margin, and that will ultimately contribute to a valuation. But yes, some of the basic, parameters they have to capture for valuation is what are the assumptions, what is the data available, what is the time period that you're looking at, what is the objective of the valuation ultimately, the approach that you're following to do that valuation, right? So there are definitely certain methodologies that are available, but like I mentioned, you have to also, capture certain other elements in which are critical to that. Like Mr. Rajiv mentioned about the GMV, right? So a lot of companies are now valued at GMV, which is not directly, a revenue for the company, but ultimately, if I am really believing in the growth of that company and on that belief, I am investing certain amount in that company, right? So before I foresee any specific revenue in the company or ultimately margins, I have to see that, okay, what are the key indicators for me to judge the growth of the company, right? So GMV is one of those elements. The company may be selling the products, maybe or zero revenue, or they are even kind of giving cash back to their users. So ultimately, the revenue for the company will remain zero. But they are able to, kind of have a growth in their user base, right? Which is kind of continuously engaging on the platform, right? So that becomes the basis for my valuation analysis, right? But yes, 2 years, 3 years down the line, there will be an indication for revenue generation and ultimately margin. But yes, at this point, the company may say that, okay, because of the user growth that we are looking at, we are not able to, make any direct revenue. And on the contrary, they are burning a lot of money to kind of have this customer acquisition, giving cashbacks, or even kind of, directly bearing all the operating expenses. Right? So if you don't have the revenue, you don't have the bandwidth to kind of even, work through your working capital. That's where these all venture capitalists and private equity funds come, and they kind of, primarily invest through equity, right? So that's where, this valuation concept comes in, because all equity investment can only depend on valuation, right? And if you are raising millions and billions of dollars and just kind of ultimately diluting, let's say 10, 15, 20% of the company, then, the valuation has to be 5 times, 6 times of that fundraise to ultimately, work in the favor of that deal structure. So that ultimately the deal can happen, right? So there is aspect from the investors as well. I'm hoping I'm not taking too much time.
Just be brief and finish up in...
Yeah, just trying to be brief here. So again, working on the ground, they are critical elements, right? So how you judge, the future potential of the company, that works through, primarily through financial model, right? Financial model, again, a lot of people perceived as a, very basic projections, right? But those projections has to reflect the growth prospect of the company, right? So I'm not really putting some numbers to kind of get a valuation or, to understand that, okay, I can achieve, 10, 15, 20% growth year-on-year basis. But yes, what is the fund that I'm looking to raise, where I will utilize those funds, and how much it will help the company to grow, right? That should be clearly be defined through your financial model. And ultimately, with those parameters, when the company can achieve certain sustainability, right? So ultimately, the investor will be looking for his return, and founder is also kind of running the business to generate money ultimately, right? So where the company will, kind of get the sustainability and, continue to generate consistent margins, right? So those are critical factors when you kind of, looking through a future path of the company. Right, again, a checklist that you have to kind of keep in mind, company profile and a capital structure that helps you to understand about the product and services, right? And what is the kind of, holding of the current shareholders or the founders or the key people in the company, right? What is the corporate governance implication? In a startup, it's maybe very, low, but yeah, if the founders carry vision for that, that also kind of helps you to have a higher valuation ultimately. Economic and legal environment, financial statement and regulatory information, growth analysis and management strategy. This growth analysis and management strategy again become very critical, right? These are, points in the checklist are interrelated. But yes, when you have to think that which are the things that you have to give more weightage, I think you need to have a very detailed discussion with founders and key management about their growth strategy and, our future growth that they're looking to achieve. Critical elements we already discussed. Right, where they want to achieve and what kind of, on-ground effect they want to make, right? So let's say, we all used to book taxis, through going to taxi stations or, waiting on the road, some taxi or, auto would pass by and you will just, kind of try to stop him and, he may give you a ride, right? Then the, ecosystem of booking through phone, came, and company like Meru and other, they started and they, started taking bookings on the phone, right? And then through the use of smartphone, the Ola Uber came into the picture, right? Now we are all booking cabs through applications, right? Now, when we were all using or booking or taking the cabs, waiting on the road or visiting a taxi stand, right? How many of us thought that, okay, we will be able to book a cab through our, phone only, right? Nobody even, thinking of smartphone. But as an entrepreneur, if you think that, okay, booking a cab or going to a taxi station is really a challenge in the ecosystem and that you want to solve as part of your product offering to the masses, right, or to ultimate users, right? Now, what is the step-by-step approach that you can take to ultimately convince any investor or any partner so that they feel that, okay, this is really possible when somebody is actually not having, smartphone in their hand, right? So this is the vision that, the founders carry, and plus the on-ground execution plan, right? And that ultimately contributes to valuation. So from a, crux point of view, right, you have all the
Good.
financial and non-financial parameters. But this is the crux that, okay, if you are able to convince on the vision and you have planned for a step-by-step approach, I think that's where you can support your valuation.
Good, good. Thank you, sir. Thank you.